If you are over 65, there may be money leaving your household every single month that you do not need to be paying, not because you did anything wrong, not because you missed a payment, but because some senior savings programs, fee waivers, and tax breaks do not activate automatically. They sit behind a form, a question at the bank, or a deadline buried in county paperwork. And the troubling part is this: most people never find out until years later. They keep paying the full bill. They keep accepting the monthly bank charge. They keep filing taxes without checking the senior deductions they may qualify for. And by the time they finally notice, hundreds or even thousands of dollars may already be gone. In the next few minutes, I'm going to show you 3 places where Americans over 65 should look immediately: the IRS, their bank account, and their county property tax bill. One of these could be costing you money right now. But do not skip ahead, because the third one is often the biggest yearly bill of all, and in many areas, senior homeowners may qualify for relief that is not automatically added to the bill. By the end of this video, you will know exactly what to check, what to ask, and which official office to contact. You do not need to be a tax expert. You do not need complicated paperwork. You only need to know the right questions before another bill arrives. Quick reminder: every program depends on your income, age, state, county, bank, and personal situation. This video is for education only, so always verify details with the IRS, your bank, your county assessor, or a qualified professional. Now, let's begin with the first place seniors may be paying more than necessary: their federal tax return. Section 1. The first bill to check: your tax return. Let's start with the IRS, because this is where many retirees may be paying more than necessary without realizing it. Now, I am not saying the IRS is charging you illegally, and I am not saying every person over 65 will get a refund. But there are tax rules, deductions, credits, and filing choices that can make a real difference for older Americans, and many people never check whether they qualify. The first thing to understand is this: turning 65 can change the deductions available on your federal tax return. For many taxpayers who are 65 or older, the standard deduction may be higher than it is for younger taxpayers. If you are married and both spouses meet the age requirement, that additional amount can be even larger. But here is where people make a mistake. They assume their tax preparer automatically knows every detail, or they use tax software, click through the questions quickly, and do not carefully review the age, filing status, blindness, medical expense, and retirement income sections. One missed box can mean you do not receive every deduction you qualify for. So here's your first action step. Take out a copy of your most recent federal tax return. If you do not have it, ask your tax preparer for a copy or create an account through the official IRS website to review your records. Then look at 3 things. First, confirm that your date of birth and filing status are correct. Second, check whether you received the additional standard deduction for being age 65 or older if you qualify. Third, ask whether itemizing deductions could help you more than taking the standard deduction. Many retirees do not itemize because they believe they do not have enough deductions, but medical costs can add up much faster than people expect. Think about what you paid during the year: Medicare Part B premiums, Medicare Advantage or Medigap premiums, prescription drugs, dental work, hearing aids, eye exams and eyeglasses, medical travel, home health services, long-term care insurance in some situations. These costs do not always create a tax deduction. The rules are specific, and only certain expenses count. But if your qualified medical expenses are high enough compared with your income, they may reduce your taxable income. That is why keeping receipts matters. A lot of seniors throw away receipts because they think a small pharmacy purchase does not matter, but one prescription may be small. A year of prescriptions, premiums, doctor visits, dental work, and medical supplies can become a large number. The goal is not to guess. The goal is to collect the information and ask a qualified tax professional one direct question: Did I receive every senior deduction, medical deduction, and credit available for my situation? That one question could uncover something important. There is another area to check: taxes on Social Security income. Many people are surprised when they learn that part of their Social Security benefits may become taxable depending on their total income. This can include retirement withdrawals, part-time work, pension income, interest, dividends, and other income sources. The key word is planning. If you withdraw a large amount from a traditional retirement account in 1 year, it may push more of your Social Security into the taxable range. It may also affect other parts of your financial picture. That does not mean you should avoid withdrawals you need. It means you should understand the timing before you make a major move. For example, if you need money for a home repair, a new vehicle, or a large medical bill, it may be worth asking a tax professional whether spreading withdrawals over more than one tax year could make sense. Again, this is not personal tax advice. It is a reminder to ask before you act. And one more important warning: do not trust random social media posts claiming that every senior can stop paying taxes after age 65. That is simply not true. Age alone does not automatically erase federal income taxes, but age can affect deductions, filing thresholds, retirement rules, and eligibility for certain programs. That is why checking your own return is so important. Now that you know what to review with the IRS, let's move to the place where money can quietly disappear every month: your bank account. Section 2. The bank fees that may be easy to miss. The next bill is not usually a large bill. That is exactly why people miss it. It may be $8, it may be $12, it may be $15, and because it comes out automatically each month, many people stop noticing it. I am talking about bank maintenance fees, service charges, paper statement fees, overdraft fees, and other account charges. Some of these fees may be avoidable. Some banks offer accounts designed for older customers. Others waive monthly fees if you meet certain conditions, such as maintaining a minimum balance, receiving direct deposit, or using a particular type of account. But bank policies vary widely. There is no single senior rule that applies to every bank. That means you should not assume you qualify, and you should not assume you do not qualify. You need to ask. Here is a simple exercise. Pull out your last 3 bank statements. Look for words such as monthly service fee, maintenance fee, account fee, paper statement fee, overdraft fee, returned item fee, a TM fee, foreign transaction fee, then add them up. A $10 monthly fee may not feel serious in 1 month, but over 1 year that is $120. Over 5 years, it is $600. Before considering any other charges. Now imagine a retiree with 2 accounts, a checking account and a savings account, both carrying monthly fees. That money could be paying for groceries, prescriptions, utility bills, or a family visit. Your action step is simple. Call your bank or visit a branch and say, "I am reviewing my account fees. Is there a lower fee account, a senior account, or a way for me to qualify for a monthly fee waiver?" Then ask a second question. Can you show me every fee I paid during the last 12 months? Do not be embarrassed to ask. This is your money. You are not asking for a favor. You are asking for information about your own account. And while you are speaking with the bank, ask about overdraft protection. Overdraft fees can be especially expensive because one small mistake can trigger a large charge. Maybe an automatic bill comes out one day before a deposit arrives. Maybe you forgot about a subscription. Maybe you wrote a check and did not record it. The bank may cover the payment, but then charge a fee. Some people prefer to link a savings account to checking for overdraft protection. Others prefer to decline certain overdraft services, so a transaction is simply declined instead of creating a costly fee. There is no perfect choice for everyone, but there is one bad choice: never reviewing the options. Also, look closely at automatic subscriptions. This is not always a bank fee, but it appears on the bank statement. Streaming services, magazine subscriptions, identity monitoring services, old insurance add-ons, unused phone app memberships, charity donations you forgot were recurring. Many seniors are paying for subscriptions they no longer use because the charge is small and automatic. Take 30 minutes this week and circle every recurring charge you do not recognize. Then call the company directly using the official number on your statement or the company's official website. Do not call a number from an unexpected text message or email, and please be careful of scams. If someone calls claiming to be from your bank and says there is a problem with your account, hang up and call the number printed on the back of your debit card. Never give a caller your one-time security code, online banking password, or full social security number. A real bank may ask you to verify information when you call them, but an unexpected caller demanding codes is a major warning sign. Now, there is one more bank-related issue many retirees should check: where their cash is sitting. A checking account is useful for bills and daily spending, but it may not be the best place for every dollar you have saved. Interest rates, account protections, and access to funds can differ from one account to another. Before moving money, compare official account terms, insurance coverage, withdrawal rules, and fees. Do not move money because of a stranger's promise online. Do not chase a high rate without checking whether the institution is legitimate. And never send money to someone who says they can unlock a senior benefit, recover lost funds, or invest your savings for guaranteed returns. Now let's move to the third area, the bill that can be one of the biggest expenses for homeowners over 65. Section 3. Your county property tax bill. If you own a home, your property tax bill may be one of the most important documents you receive all year. And depending on where you live, there may be programs for older homeowners that can reduce, freeze, defer, or rebate part of that bill. The important word is may. Property tax relief is controlled mostly by state and local rules. That means the program in one county may be completely different from the program in another county just a few miles away. Some areas offer senior homestead exemptions. Some offer a reduction in assessed value. Some offer a tax freeze for qualifying homeowners. Some offer a rebate based on age and income. Some allow tax deferral, which means payment may be postponed but could later become due when the home is sold or transferred. And some areas offer no special senior program at all. That is why you must verify the details locally. Here is what to do. Find your most recent property tax bill. Look for the name of your county assessor, tax collector, property appraiser, or treasurer's office. Then visit the official county website or call the official number listed on the bill. Ask these exact questions. Do you offer any property tax relief for homeowners age 65 or older? Is there an income limit? Is there a deadline to apply? Do I need to reapply every year? Can I apply for prior years if I recently learned about the program? Does this program reduce my bill, freeze it, rebate money, or defer payment until later? That last question is very important. A reduction or exemption can lower what you owe. A deferral may postpone payment, but it is not always free money. In some cases, interest or a lien may be involved. Always read the terms carefully before signing anything. You should also ask whether there are programs for veterans, disabled homeowners, widows or widowers, or people with limited income. Even if you do not qualify for one program, you may qualify for another. And do not assume that your mortgage company handles this for you. If your property taxes are paid through an escrow account, your mortgage company may pay the bill, but that does not mean it automatically applies for every exemption available to you. You may still need to submit the paperwork yourself. Another important point: watch the deadline. Many local programs have filing deadlines early in the year. If you miss the deadline, you may have to wait until the next tax year. Put a reminder on your calendar. Write it down near your tax documents. Tell a family member who helps with paperwork, because missing a deadline can cost you an entire year of possible savings. And if you rent instead of own, do not skip this section completely. Some states and local governments offer renter rebates or property tax relief programs for qualifying older adults. These programs may be based on income, rent paid, age, or disability status. Again, check your official state or local government website. Section 4. Your simple 7-day checklist. Now, I want to make this easy. You do not have to solve everything today. You only need to take one step each day. Day 1. Find your most recent federal tax return. Day 2. Collect your medical receipts, insurance premium records, and retirement income documents. Day 3. Review 3 months of bank statements for monthly fees and subscriptions. Day 4. Call your bank and ask about fee waivers or lower cost account options. Day 5. Find your latest property tax bill or rental records. Day 6. Call your county office or visit its official website to ask about senior property tax relief. Day 7. Write down what you learned and decide whether you need help from a tax professional, financial professional, or local benefits counselor. This is not about panic, it is about awareness. The biggest financial leaks are often not dramatic. They are small charges, missed deadlines, and programs people never knew existed. You worked for your money. You deserve to understand every bill that takes money from your household, and you deserve to know which questions to ask before you pay another dollar. Before we close, remember the biggest lesson from today. Getting older should not mean paying more than you truly owe. There may be senior tax deductions you have never claimed. There may be a bank fee you can ask to have removed. And there may be a property tax program in your county that could reduce your bill year after year. None of these savings are guaranteed, and every rule depends on your age, income, bank, state, and county. But one short phone call, one visit to an official website, or one conversation with a qualified tax professional could help you find out what applies to you. So this week, do not just set this video aside and forget it. Open your latest bank statement. Look for monthly service charges. Pull out your most recent property tax bill. Check whether your county offers a senior exemption, freeze, rebate, or deferral program. And before you file your next tax return, ask whether you qualify for every senior deduction and credit available to you. You work too hard for your money to let small charges, missed forms, and unclaimed benefits quietly take more than they should. If this video helped you, please share it with one person over 65 who may need to see it. It could be a parent, a neighbor, a friend from church, or someone in your family who has been paying the same bills for years without ever questioning them. And if you want more simple, practical updates about Social Security, Medicare, retirement money, IRS rules, and benefits for seniors, subscribe to Preston Updates and turn on notifications. Thank you for watching. Take care of yourself, take care of your money, and I will see you in the next video.